Join us for a two-part interview with Neeraj Bansal, co-founder of CredRight, an innovative financing company from India who's using traditional lending strategies to support the tens of millions of small businesses that are the backbone of the Indian economy. A beautiful example of old school meeting new applications to create an exceptional business. I hope you join us.
I always thought that I would be doing something on my own. I will try and impact the society in some way or the other, but never thought that I would be running a credit business.
Okay, let's get into this. In India, 60 million families are self-employed. That translates into 120 million jobs in the Indian economy, accounting for 40% of their GDP. But many are so small, traditional banks won't support them with finance products. Imagine there are 400 million small and medium business enterprises that form the backbone of economies around the world. They're the main source of job creation globally, accounting for more than 95% of firms and almost 70% of employment. It takes courage, tenacity, and at some stage, cash to make those businesses work. But when you're starting out, finding additional investment to support your business can be hard to come by. The Federal Reserve suggests the average small business spends more than 30 hours simply finding and applying for a loan, with major banks only approving less than 14% of applications. But amazing India has a financing model that goes a long way to solving the problem. It's called Chit Funding. It's been around for almost a millennia. Here's how it works. Investors will come together and invest periodically in a pool that borrowers are chosen for on an auction basis. CredRight, the business we're highlighting in this episode, provides a service for small businesses that actually enables them to access their capital faster, with almost 40% of businesses that apply getting the money they need. Think of it as a 1,000-year-old crowdfunding strategy. It took the developing world to innovate mobile banking, and it may just be serving up a lesson for small business finance. Let's meet the remarkable Neeraj Bansal. I would like to welcome Niraj Bansal, who's one of the co-founders of CredRight, coming to us today from Hyderabad in India, a city that is much warmer than the one that I'm doing this interview from. And I'd like to welcome you and thank you so much for joining us for this issue or this episode of The Creators.
Thanks for having me, Robert. My pleasure.
So, Neeraj, would you mind telling us a bit about your background and what CredRight is all about?
Sure, Robert. So, I'll start with CredRight. So CredRight is all about bringing access to credit to self-employed or small businesses in India. Now, I come from a family of self-employed, right? So my father is and was a self-employed person. Just to give you a perspective, roughly 60 million families are self-employed families in India. And they in themselves create 120 million jobs, right? And if you take an average family of 5, roughly half of India is self-employed, or depends on self-employed businesses, right?
Wow.
So most of us come from the background, right? Now all my family, whether it is maternal, paternal, all of them are self-employed, and I have always seen this constant struggle to grow. Even now, but more so 20, 30 years back, there was nothing called credit in India. Right? It was all about what you earn, and what you save is what you can further deploy for your growth if you're ambitious enough. Or the best thing is to go and find a government job. Right? That used to be the thing at that time. Anyways, I saw the struggle of my dad, my family members around while I was growing up. So I obviously decided to go and study hard. Did my engineering, did my MBA from one of the premier institutes in India, and found a cushy job. Moved to UK, was there for a decade. I was selling software services to small banks, and they were largely focusing small businesses in and around London, and try to do one-click loan at that time. So there's a bank called Ivo Bank which came in. Barclays was trying Ping at that time, and multiple things were happening. While selling software services to them, two things did strike me. One, the access to capital to small businesses make them grow significantly faster. and that's something definitely was missing, back home. This created the entrepreneurial bug, moved back to India, started looking, how do we actually solve the problem in UK and the entire Western nations. Obviously, the data collection is significantly higher. Things are more formal. Everything is happening online, or the money is becoming digital. Unfortunately, though we are progressing very fast, still large part of India transacts only in cash, right? There's hardly any formalization. So as I mentioned, 60 million small businesses or self-employed businesses, not even 10% have access to credit from formal channels. And the remaining 55 million are informal, right? They also don't want to comply because it is costly, it is cumbersome to do that. And because of all these reasons, access to credit has never been there, is still not there. And this is what, with CredRight, we want to change. We want to bring access to credit to such small entities. We know these people run significantly good businesses. Their intention to pay back is significantly higher. The challenge is obviously the access, because it is costly to reach out to small parts, as well as your ability to weed out the bad ones from the good ones, if I can say so. And hopefully with the CredRight platform, we are able to do that.
Well, the immediate thing that strikes me in what you're saying is, of course, if that number of people have got their family's livelihood and success tied up in being self-employed, there's already a high motivation to pay it back. These are not people that are just kind of taking a punt and starting a business. So I'm curious, though, before we talk a little bit about the model, which will be actually probably something quite new to a lot of people who will be watching this. I'm just curious, given that so many people are involved in being self-employed and it affects so many people within India, why aren't the banks more progressive in the way that they support these small businesses? Why does it take an entrepreneur like you to come along with a solution?
Sure. The whole answer lies in the economics of it. Now, most of the banks, are working with a very, very small net interest margin, which is generally 4 to 5%, right? So I lend at 10 to 12%. My cost of capital is around 4 to 5%. I make between 6 to 7% in between, and my cost of operations are around 2 3%, and 1% goes in bad debts and all. So I make 2 or 3%. Now, this economy only works when you are in the tier 1 cities, where the customers themselves come to your branches. But as soon as you talk about, reaching a tier 2, tier 3 town, and employing people there for them to access credit, suddenly the cost of acquisition itself becomes 5-6%. And it becomes prohibitively expensive. Second, historically, the bad debts or the non-performing assets in this category has been around 5-6%, right? So together, this too discourages any financial institution to actually focus on them, even when the pie is larger. Second, the corporates in India have started getting access to credit in last 5 to 10 years itself, right? So most of the banks have focused there, which was simpler to do, or focus on retail. Again, given the size of population, the retail consumers are also in millions, right? So people who have got formal jobs, who have higher, credit bureau scores, are the ones again being targeted by banks, and they have their hands full there. This is the reason why people like us are required, who can, one, try and digitize the access part so that you can bring the cost down, and second, utilize significantly better data sources, which can reduce your bad debts as well, right? So if you can somehow solve those two problems, then you are able to do it. And legacy banks across the world find it very, very difficult to change and adopt technology at the fast-paced level, and that's why they are not able to solve this problem, in my view.
It's interesting. Sorry, we're seeing a lot of innovation in the banking sector across the world. So it strikes me that the mindset of an institutional bank in India is probably not that dissimilar to the mindset of institutional banks in the UK or Canada, by the sounds of it. So one of your model relies on something called Chit Funding. And I'm wondering if you could give kind of a layperson's explanation of what Chit Funding entails and how it works for a small business.
Sure. Now, as I told, historically, self-employed has never got access to formal credit. So most of the small businesses, rather one in two, has relied on this phenomena called chit funds, which, by the way, is present in some form or the other across the globe. Is also called ROSCAs, as rotating saving and credit associations. But if you go to any low developed or economy from a GDP perspective, would be doing group lending / group savings. So what Chit Funds does is it brings, for example, let's say 10 people together, all of them, let's say, put $100 together. So you create a pool of $1,000, and one out of the 10 get that $1,000 every month. And once you have got the money, you can't take it again, right? So it is guaranteed that every 10 out of 10 will get in 10 months that $1,000 pot. But what it helps is in the first month itself, you give access to $1,000 to somebody, you can only invest $100, right? So the people who take it early are the borrowers, who wants that access. People who take it at the end are also savers. And then there are different phenomena. You can also charge people who are taking it early by discounting that $1,000 of pot by $100, let's say, and only give $900. So the person actually becomes a borrower because he will get 900 but end up paying $1,000, right? So there are multiple forms of it, but the chit fund industry in India has been very old. I think it is pre-independence or pre-1930s when it came into picture. There would be thousands, at least 40 to 50,000 small registered chit funds. India has also regulated them to some extent. So 40 to 50,000 registered chit funds and millions of unregistered or unregulated chit funds in India. The registered chit fund itself is huge. We have close to, if I'm not wrong, around 10 million subscribers to them, transacting upwards of $15 billion every year.
Wow, amazing. So how does out of curiosity, what percentage of the contributors of the funds are actually the businesses that rely on the funding versus investors simply looking to make a return?
So ideally it has to be 50-50 because there has to be a saver for the borrower to borrow money. Most of the groups are slightly more skewed towards the savers so that the borrowers get it at lower interest rate. So you will find most of the groups aligned at 40s to 60s. So 40% businesses taking the money out from 60% savers who are generally individuals.
Interesting. So how does an investor get a return?
So what investors do is, let's say, we discounted the chit, right? So in our first example of $1,000 chit, where 10 people came and put in $100 each, let's say the first person who wants in the first month, takes the $1,000, but we discount the chit by, let's say, $200, right? So he actually gets $800. The remaining $200 get distributed amongst all the 10 as dividend. So that basically means $20 of dividend to each subscriber, right? Similarly, second month, again, the second person will get discounted bid. Third month, again, some discount will be there, but the discount will taper off as the demand goes off. So imagine about the 10th person in the group. At that time, there's no discounting. So he will obviously get the entire $1,000, but he also made some dividends in the first 3-4 months when there was demand. So that will be more than $1,000. So overall, the person might make $1,100. So he becomes the saver or investor, and the person who bid early and got $800 becomes the borrower.
Interesting. Wow, that is such a fascinating model. So if there are so many chit funds already in existence in the market, how did you find a unique place for CredRight when, obviously when you're entering a space that is crowded?
Sure. No, so the chit funds have done a phenomenal job, but we believe in this day and age, the construct itself is slightly dated. So people, most of the 30 to 40,000 chit funds are run by, again, families. Lots of terms and conditions are opaque, not written. The rules are not clear. It is not transparent. The product construct is, again, very, very rigid. You can't change the product as it is regulated. So what has happened over the ages are that people have to now wait 80, 90 days to get the payouts from the chit fund. You would also see practices where chit funds run different businesses together, and they start using chit funds or investors' money as a front for working capital, a free working capital. So because of both scrupulous elements coming in as well as this being opaque, customers do have a lot of dissatisfaction with the product. People still flock to it because this is the only channel. But if you can provide a better channel which is significantly more transparent, significantly faster, significantly easier and convenient for the customer to interact on, they would happily move on to that platform. And this is where CredRight comes in.
Interesting. So what you're suggesting is that it's a very traditions-based method of financial transaction, and with that comes a lot of I guess old ways of doing business. And what you're doing is you're really modernizing a very kind of traditions-based method for business funding.
Yes and no. So we are modernizing it, but we are also transitioning people away from chit fund. So we are not becoming a chit fund ourselves. We are a lending company. What we are trying to do is the borrower part of the chit fund industry. We are telling them that there's much better way to get access to credit rather than going to chit funds. So what we can do is we can give you a loan in 3 days versus 90 days in a chit fund. With very clear terms and conditions, with no free, pre-closure charges, for example, no hidden charges at all. The only thing we require from you is, while you're applying on our app, can you also please upload the chit statement, which clearly shows how much money we've been putting there, as well as how and when you've been paying there, which gives us a lot of data to underwrite, that customer.
So what you're saying is you're using their traditional relationship with chit funds almost as a way to assess their credit worthiness.
Absolutely.
That's interesting. So I'm assuming that your business is entirely online. Is that right?
Majorly, we do have few feet on the street in each location, just to help the customer. Plus, traditionally, our customers aren't used to working without seeing the faces at all. So we do have a very thin presence of feet on the street in each location we serve.
So effectively agents that represent the brand.
They are on our payroll, so we ensure that they also get a formal employment.
Oh, right.
But most of this will be ex-chit fund employees themselves or chit fund agents themselves.
So I'm curious then, what's the biggest mental barrier that you deal with trying to attract new customers to the CredRight model of doing business?
Multiple, right? So the first one is, I have been traditionally working with that chit fund, and the chit fund employee knows me very well. Once he comes knocking my door next time, how would I say no, right? And it's a fascinating thing, because as you move down towards the socioeconomic strata, you would see the ability to say no to people reduces dramatically. And by the way, that's how the entire insurance is sold in India, right? You just know people and they can't say no to your face. And that's how I have been accessing credit. So I'll continue doing that. Becomes our first big issue. The second one is, historically, I have never used an app to get money. So if I start using an app, would you take all my contacts, my data? Will you misuse it? Is there some way you can get access to my internet banking, for example, if I have? So those concerns still are there, and no matter how much you share what you actually access, people still may or may not trust you that easily. So that remains the second biggest barrier. And the third one, which works against the company, is if you don't have a face or if you don't have any presence. At some point of time, we have seen that few customers or few applicants start thinking you are the source of easy money and start inventing things to do fraud. So those I would say are three biggest barriers to get new customers.
Interesting. So where did you originally launch the business, and what is the plan for expanding?
Sure. So we launched this from Hyderabad, where I currently live. And south of India is a significantly more number of chit funds than north of India. So the state name is called Telangana. We are a federal country, as you may know. So Telangana is one state, and then Andhra Pradesh another, where we currently largely operate from. And we have recently also launched our operations in third state, which is called Tamil Nadu. We started this product in 2019. We have been growing by roughly around 30-35% month on month. The pace of growth is phenomenally higher. We have seen disruptions. Obviously, COVID-induced lockdowns were a major disruption to any financial lending company, which we have gone through. But the idea is to keep growing at a similar pace, expand to even 3 more states, and reach out to. We currently get applications from around 800 to 1,000 customers, a month. The idea is to at least make it 100 times. At least get 100,000 customers applying every month on our platform. That's the scale model.
I hope you enjoyed this first part of our interview with Neeraj Bansal, co-founder of CredRight from Madhepur, India, a specialist in getting small business the credit and finance help they need. Join us for part 2 to learn how a humble beginning created the drive to use business finance to solve poverty in India.